All right. What's up, everybody? Good to see you again. Took a few weeks off, but I got a lot to talk about. A lot to talk about with you. A lot of things to look at, a lot of things to catch up on. There's been a lot of interesting movement, both stocks and Bitcoin slash crypto. Last time I left you, I had just closed out the MicroStrategy short, and I was a little bit early. And I made a post about it earlier this week, but I have to admit, it had a long setup this week. Didn't hate the stock. One could take it, but we definitely got to talk about that among other things. So, what else we got on the list right here? I want to talk about Ichimoku today too. I think it's going to be very important because there's a lot of Ichimoku cloud patterns that are really are kind of what is defining not only stocks, but Bitcoin and everything else, and things on the daily, things on the weekly. So let's hang out through the music, and we're going to hit them out as well as your symbols and symbols that people put in Discord for us to look at. Opportunity wise, broadly speaking, I'm sitting on my hands right now waiting for this market to figure out what to do. And today it did a thing that we'll talk about, which may be a little bit bearish, maybe a little toppy. We'll see. Still a bull market. Hang out. I'll be right back. Test. Can you hear me talking? All right. What's going on, guys? So, yeah, we got a lot of stuff to talk about. We're going to talk about silver. Yes, indeed. Yes, indeed. Because that has been interesting. That has actually been really interesting. I'm kind of neutral about silver. I'm definitely not a big bull on it, but I have some good friends that, oh man, I got to give them credit. They've been diehard silver bulls for over a decade, and they're finally being rewarded for that kind of patience and dedication. So, yeah, I was just letting MicroStrategy run. Not going to harp on it too much because talked about last week, but this was like a kind of a this is going to be one of my more memorable trades in my career because um, what a difference a year makes. So last November, uh, the thing that triggered me to start going to want to short this was when Saylor went on CNBC. I have a post about it on Twitter and started talking all this kind of mumbo jumbo about the Bitcoin financial reactor and how he was using leverage, the volatility to compound his M net asset value, things like that. I mean, just it's the dazzle you with bullshit kind of song and dance that any kind of con artist would do. And it took a while for the market to finally stop. But I want to talk. I got a lot of things to talk about today, and one of the things is, of course, going to be Bitcoin because pretty much every time I talk about it, you would think that would be a big Bitcoin bull, but no, it's just because uh, I was bullish on Bitcoin well over a decade ago, and now it is. Can we say the word? Can we say the word retards? Now it's full of retards. Okay. So maybe when it comes down to a certain point, I'll explain my reasoning a little bit. I mean, look, the market punishes people. I think you got to understand that when everyone is saying that something is the best thing ever to buy, it is categorically not, because that's reflected in the price. And what I've found by looking, of course, my favorite, which by the way, make sure that you don't buy Monero. Make sure that you do not buy it because the government tells you that it's bad, is that when the price of something is relatively low, like for instance, when Bitcoin was $400, you couldn't even give it away. Nobody wanted it. Nobody cared. But when the price of something is, well, it was six figures, now everybody thinks it's the best thing ever and they want to buy it. So that's just human nature. And, but yeah, that's, banks are letting customers buy Bitcoin. Well, it's not really new. You've been able to put Bitcoin in IRAs for a while. Yeah, all that stuff's coming about. But the problem is that's what you need. What is the next thing that is going to drive the price up? Bitcoin is just based upon what people think it's worth, feel it's worth. Okay. It's a really not good way to fundamentally back an asset. I was talking to a friend about, MicroStrategy and their whole strategy of backing up their, products, their financial products, with Bitcoin. But you could do that with like oil, for instance. Like if you wanted to do it, you could have a company that bought a bunch of oil, put it in storage tanks, and then offered people a dividend of cash, promising them, well, if we need to, we'll sell the oil to pay your dividends. And then what you're banking on the price of oil going up, which I think we need to check on oil because it's a big bellwether of the economy. But let's hit the top of the discussion. So, what is my questionable, bear posting clickbait thumbnail? Well, I've been waiting all week watching S&P 500 futures to see what happens at this volume profile level. I don't know, single. It's, almost every year you get that Santa Claus rally, and it's December now. I mean, here's the thing. Every year it's like it's kind of like an almanac. If you're familiar with what an almanac is, it's basically a list of like weather, going back, and like this year was this year, and you can kind of sort of see patterns that happen. And that's what an almanac's for. And there's stock almanacs out there. I used to subscribe to the stock market almanac, but there is definitely a seasonality in December. The Santa Claus rally, which they have a very specific definition of it, but for me and my, my experience, the Santa Claus rally is just quarter four, really can kind of start in November. And it's all the kind of activity of, rebalancing, people selling, taking profit, that kind of thing, which is ironically, people taking profit means the market tends to go up. Can't explain it, but that's kind of the underlying, thesis behind it. But we had this big pullback in November, and while I was, spending some time with family and traveling and that kind of stuff. And we need to talk about what it did in the context of Ichimoku, like I said in the introduction. We need to talk about Ichimoku cloud pullbacks because these are very relevant. Again, like everything in trading, nothing's 100%, but I'm going to go back through history and show you something about what you need to infer when you see price do this, which is pull back to what in this case, bullish case, would be the bottom of the cloud. But as I said, I've had this level marked off for pretty much the last 2 months. This volume profile by the way, is a nice little tool that shows you where most of the trading happened at what price. And on S&P 500 futures, depends on the time frame you put it on, but it's generally, you get lower, you get the more accurate level. But let's call it 6,885 on the S&P 500 futures. And then I've been watching this pullback from November come back up and seeing what it's doing this level. And this Friday, today, is long. Well, we have about 48 more minutes before, but it looks like it's going to close to hold underneath it. And this is going to be the first level resistance it needs to conquer to then try for the all-time high on the S&P 500. And that's bearish for it to hold it. Now, I am very reticent to claim, oh, the market's over and start buying puts. I don't do that. But this is something that should be taken heed of. And I don't want to like pile on all the FUD and things like that people get into, just to scare people and get them some engagement. But this is a weird pattern. And let's talk about the Ichimoku side of things. Okay. So not only do we have this level right here, which is going to be kind of like the defining line. Like if Sunday night comes and that Sunday to Monday daily bar on futures closes above 68,085, then I'm going to say we're going to most likely come and retest the all-time high. We'll see what happens there. But this close right here on Friday, that's bearish. That would be something worth taking a trade on. Didn't put any puts on today. I'm just kind of going to see what happens and stuff like that. It was also an 88% of, oh, wait. So, what context was this? Okay. We'll talk about Bitcoin and digital assets in just a second. Lots of things to talk about that. So, let's put on Ichimoku. Let's clean up everything else. I like to keep things simple, as I've been trying to tell people to do, to simplicity. So Ichimoku is an indicator set, for those that don't know, that combines 50% retracements, which is another foundational part of my trading, looking at 50% retracements. Like, you can call it a Fibonacci, but technically 50% isn't a Fibonacci. I don't use fibs, but I do use 50%. And what happens when you put the indicator together, it makes a 50% retracement of 52 bars, and then shifts it forward to create this yellow line, which is called the Senkou or Senkou, whatever you want to pronounce it Japanese-wise, B. Senkou A is the white line, and the Senkou B is the bolder yellow line. And that creates the cloud. That's the most visually striking thing about the Ichimoku indicator set. Now, over the years, I've spent years studying deeply into Ichimoku, and now I use it in two primary ways, both for trends. When price is above the cloud and momentum is also above the cloud, trend's bullish. Very simple. When price is below the cloud and momentum is below the cloud, trend's bearish. Now, if you have a situation where price is a little below the cloud, but momentum or Chikou is not on the other side of the cloud, it's neutral. In fact, it's still a bullish pullback. However, what I've always observed and assumed and learned and taught is what part of the cloud price pulls back to is important. Now, if you'll notice, this is the first time in a long time since April that it's even pulled back to the cloud. The first time we had a little healthy pullback here in November. But what you want to go back and you want to observe, you can do your homework on this, is whenever price pulls back to, let's say, just the top of the cloud, that's still a little bit bullish. We still have a little bit of hope. But when it pulls back to the bottom and actually touches the bottom of the cloud, like it did here back in January, or here, or let's say here, or here, or well, that's really since 2022. So in these cases right here, what you have is about, this time it failed. You went through a deeper pullback. This time it went on to retest the high. This time it went on to retest the high. This time it didn't. It consolidated and went down. And now we have another. Okay. So we're about 50-50. Nothing's 100% in trading, but let's switch over to Bitcoin and take a look at that. So Bitcoin on the weekly, and I'm going to use this interchangeably because this is time frame independent, which you want to look at. Again, when it pulls back to the top of the cloud, that's a pullback that will probably go and retest the high, probably break it. But when you like here, retest and break, but comes down to the bottom of the cloud, that is a danger sign. And I did this, I think on my Discord, a little bit earlier this week, maybe yesterday, where we looked at the times where prices come into the cloud, still bullish, went up, down to the cloud, that's obviously bearish, down to the cloud here, obviously bearish, down to the cloud here, obviously bearish. This time, down to the bottom of the cloud, it actually continued. And so what you end up doing is if you go through and you find out, you're going to find about 60 to 70% of the time, go through instruments and validate that. Whenever it pulls back to the bottom of the cloud, you're probably going to get a pullback up, but it's less likely. In other words, more often than not, you're not going to get a continuation of that trend because it's a sort of momentum indicator. In other words, if price comes back very quickly, people buy it up. In other words, it comes back not that far and doesn't take that long, then that trend is still strong. It's going to continue. And so within the context of Bitcoin on the weekly, it has done its first pullback to the bottom of the cloud in a very, very long time. And we can just kind of spot check this. The weekly is a very important metric for that. Now, what this means, there's a pullback to the bottom of the cloud, didn't quite do well. Is basically the first one in this trend. Here's the time it pulled back to the cloud, didn't actually do it. Let's go back to 2013. On the daily, if you go back through, just note and see what happens when price on pretty much anything pulls back to the cloud, and see if you notice that ends up being a momentum indicator. Now, that being said, I still presume whenever price pulls back to the cloud that it's going to potentially try to come back up. Because you're still in a bull trend, you're still in a bull market. But I'm going to assume that once it's pulled back and touched the bottom of the cloud, that a lot of the momentum has been evaporated. And that's when I'm going to start looking to see if it holds the resistance. So that's going to be our first sign that the trend has weakened, and I might want to be looking at the top of it. Yep. So if you have questions about that, make sure to let me know. So that is the general premise of it. And so there's a lot of instances. Let me see if I can find the Discord where I posted that annotation. I think I put it in. By the way, make sure that you do the algorithmic things. But more importantly, come to the Discord, because that's where I talk about a lot of these things and share things in real time. Aimer filling up my chat with lots of bull posting or bear posting. Yeah, so this was essentially, this was the S&P one that I did. I just did that for you guys. We can't paste it anyway. So go through and look at it. But the general premise is this. If I'm looking at this on Bitcoin on the weekly, this is still bullish, still contained by the cloud, still bullish. We're in a bullish pullback. However, if you guys have followed my live stream for a while and you know the things I love to look for, it's going to be spikes, volume profile levels, but also the tried and true 50%. I don't know for sure, but I'm pretty much looking for a pullback to the 50% of the trend, and then we see what happens. And so, there's going to be a lot of, things will be fine. Who knows what, and it could pull back up to 103, the 50% retracement of the leg down, which, as I said, Ichimoku is based upon 50% retracement. That would be the green line. Actually, red line right now. So that's a very, very key resistance level right there to beat. So essentially, the two major levels I'm looking at right now that's caught between what's going to define what happens is 103 on the upside and 70 on the downside. And incidentally, going back to MicroStrategy, Sailor's MicroStrategy's break-even point is about 74. That's where they have not made any profit on all their buys. And we'll talk about that now. So if you got any questions, and by the way, for the last part of the live stream, make sure you put in the symbols. I got a list from people that put me on Discord, even text message for us to look at. And we'll go through them all, and I'll give my opinion on it. Sometimes I find stuff I really like. All right. So going back and revisiting MicroStrategy, I'm always early. I always take profit too early. I'm sometimes in too early, especially since November. This was so trying because, I had to close my platform in the summer when it was doing this little number right here, because I'd gotten kind of excited because it worked out in March and April, but then about here, wasn't looking too good. But finally, I closed this thing out at about around 200. Too early. But the key level that it was searching for was 165. That is the volume profile level for the pre-Yeet time period price era. And so I was always kind of looking at that. And then Monday of this week, there was a lot of news about how they were starting a reserve of US dollars instead of reserve of Bitcoin to pay off 23 months of dividends to make the market feel better about their stock, abate the down move. The thing about that is when a company comes out and they start saying that everything's fine, every company that has ever gone bankrupt said that every time. Now, that's not to say they're going bankrupt. I'm not saying that at all. I'm just saying that every company has said that before they went bankrupt. And even though the intent of like making Twitter posts about how you're fine, doing things to prove that you're fine, sorry, my eye's itching, it's just a bad look. You know who doesn't feel the need to answer people? Confident people. And it's just a bad look. That being said, if I'm following my rules for setups, and I made the post on Monday on Twitter, by the end of the day that day, this bar right here, before it even fired off the spike indicator, which you can get, by the way, message me on Discord. It's real simple. Real simple. It's just actually this isn't a proper ATR clearance. I should have made a quiz for my more diligent viewers about that. Hold on. I had a call. Yeah, in this indicator, I have an ATR clearance number that that I always want it to be over 80%. That's like my minimum for taking a trade. And this is 68. So this actually doesn't qualify, but I have it set lower just so that I can kind of see and identify this stuff. I didn't even notice that someone pointed this out in Discord, and I was just like, meh, no, but the key thing here, actually, this isn't a good trade. And I didn't take it anyway. However, this bar right here, like if you were really, really wanting to day trade this, by the close of this day right here, once you saw this candle spiked a key support level and then close back above it, you could have gone long capture. This is a good like 12%, I think, from the close here, about 170 up to 190. Yeah, that's a pretty good. That's a pretty good little bull trade if you wanted to. Now, if this was fitting my criteria of being 80% and not a company that's run by a con artist, then what you would do is you would set up a trade to go long on this red line, stop at that little cross right there, and you'd play it up to the second cross above. That's a 3-to-1 reward risk ratio. And that actually works out technically in this trend. Do we have a 50% to this point? Roughly. So if this wasn't, if this was a higher ATR, average true range clearance of that past low, that low right there at 65, and this wasn't a Ponzi scheme, this would be a good trade. So yeah, that would be my criteria for that. Yeah. Had the right ATR technically and wasn't a corporate, engineered Ponzi scheme. So that's kind of interesting. And let me throw a little bit of shade because I talk to Bitcoin maxis a lot, and there are some that I love and I see everybody. I want to be friends with everybody. I want everybody to be successful. And when I poo poo stuff like this, I generally want you to not lose money. I generally want you to have good investments that pay off. And when I see people making massive errors in judgment, I can't help but point out, I don't think people listen. I hope they do. I hope some people do. I think I've gotten through to a few people. That's why I do this. I want to share what I think is actually useful. But it's just the definition of a Ponzi scheme is when you take new investor money to pay old investors. And they've created financial products, a leveraged financial product around Bitcoin, using it for marketing and an asset, okay, to pay people dividends from these preferred options. It's like I'm advertising them. You know what? Make sure that you don't buy Monero. I'm advertising these. Do buy these. I don't know. Do the opposite, but just don't buy it. But like I remember talking to people about this more recent one they just released, STRC, and the premise of this one is you buy it and they pay you a dividend, and the dividend is always going to be such that they try to keep the value of the underlying at $100. In other words, if the price goes down too low, they increase the dividend to 11% to try to get people to buy it. Basically, that's the whole premise of it. It's just whatever it needs to be to keep your underlying, because you take it true like a stock at $100 so that you don't lose money, they'll pay out in dividends and they guarantee it. But this creates massive financial obligations and they don't have any revenue. They're just depending on number go up. And what makes Bitcoin number go up? Well, that's people's faith in it. And there have been a lot of memes this year. And look, let me just be honest. I had rental properties and I had to put in 2 new air conditioning units in December and January of this year. It wasn't last year. No, it was this earlier this year. Okay. And so each one was about $14,000. So $28,000 I had to put into rental properties I already own as maintenance. I had to. They went out. And as I saw throughout this year, the price of Bitcoin going up, I couldn't help but think, man, wouldn't it just be, maybe they're right. Maybe having investments in real estate, maybe having investments in anything else, man, maybe they're right. Damn it. Damn it, damn it, damn it. Like I had to spend it on this real estate. That's $28,000 that maybe I'll get back over the years in rent. But that's like what it takes to be a landlord. But I've had to put that money in. I'm not going to see a return on it. Meanwhile, I have to manage it. I have to answer calls. I have to go fix stuff. I have to buy stuff for it. It takes upkeep. Whereas this asset, if I would have put my money into that, well, I'd have a return on it. Made me feel bad. But deep down, I know that the rules of finance still apply. And when everybody is bullish on something, that is not the time to be getting in. And so now the memes are that where are we this year? So from year to date, down 5%. And the meme is US Treasuries have outperformed. Now, a lot of things have outperformed, but it's just so interesting to me, like doing these live streams every week, talking to people every day. and hearing their opinions from every single day, where they think that things will be in a year, to just having this happen. There's several things that have happened this year that have just kind of gone unnoticed. Okay. So with the whole yeet, as it were, from November was based upon Trump's election. Trump was seen as a pro crypto candidate. There was all this talk about the taxpayer funded bailout of Bitcoin. I mean, I'm sorry, strategic Bitcoin reserve. And that hasn't happened, nor is it going to. And that's been pretty much, it's pretty evident now. They're not really going to do that much more. They got other obligations. And so that narrative's kind of died this year. And also in August of this year, that was when MicroStrategy put out a notification that they were going to stop buying Bitcoin, issuing new shares, diluting their shareholder equity. What was the phrase? I liked it so much, the euphemism. It was accretive dilution. Was it accretive? They're accruing Bitcoin by dilution. It was like an accretive dilution finance or something like that. I loved it. It was very explanatory and such a euphemism for printing more shares to make money to buy something. It's cool. Yeah, it's a good idea. Money printer. But they called it the infinite money glitch. And they turned it off in August. And I remember reading that. It was official MicroStrategy press release. And I was like, and remember, I was really struggling with this trade in the summer. And it hurt. Oh, it hurt. It was getting up there to six figures and red. And yeah. So but when it started to come down, I saw that. I was like, oh, they just stopped. This is huge. No one really paid attention to it though, because number always go up. They didn't need to. Bitcoin, after all. And now here we are. Now, I think that the FUD is a little overblown. I answered the question on Discord today about it, going long on this. You're basically trading the news. There's an index rule that they put in place where if companies have, it's like NCSI index is run by JP Morgan, I think. I'm not sure. It's all a big conspiracy, by the way, if you ask them. But they're going to put in this rule, or they have put it in, where if you have more than 50% of your assets in cryptocurrency, you cannot be listed inside of these certain indexes, which means that there's going to be a lot of forced selling from these indexes, something to the tune of like $8 billion worth of MicroStrategy being held by some of these indexes once this rule goes into place. And so it's really kind of instead of a buy the rumor, sell the news event, it's a sell the rumor, buy the news event. In other words, if they do get delisted, I think it's priced in already. You might get a little bit of, downside more. But if they don't get delisted on January 15th, then you're going to get a big pop-up. I'm not trading it, but I'm going to watch it and see. But that is basically the trade right now on MicroStrategy. But I don't want to talk about this anything. We'll really quickly though. Like I said, I'm looking for 103 on the top side and 70 on the downside. But my long-term thesis is that you're probably going to come back down. If this is the bear market, as it has happened 5 times before, if this is the 6th, then you're going to see at least a 65% pullback. The last one was 75%. The one before that was 85. The one before that was 95% pullback. If this is another bear market, you're going to see at least a 65% pullback, which from the high, as we measure it, 65% down, that ends up being about 43, which is the most ironic thing, because guess what happened at about 43, where there's a volume profile level at 42? What is this price action right here? Jeopardy music. Anybody want to tell me really quickly? Usually I know chat's lag, so you won't. So I'll let you think about it a second before I give you the answer. What was this run up right here in this bar on the 11th of January? Do 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 do. The ETF lunch. I can see the headline or the Twitter post now. ETF buyers now in the red. Now you just poke a little head below it. But let me tell you a little anecdote. I'm not going to mention names. 2021, went to everybody's house. He was big into DeFi, big into Ethereum, and crypto. He was like, I tried to hang out with this guy so that I could like learn by osmosis. He was much younger than me. You know, he was the age of I got into crypto, Bitcoin. I was about 28 when Bitcoin came out, and I got really into it. And I was like young and like eager and like absorbing all the information about it. And now I'm older, you know, as 22, I was in my late 30s. And here's this young guy. He's an expert on DeFi. I'm like, okay, I need to learn this stuff. So I was hanging out with him a lot, you know, and I wasn't getting it, by the way. And I thought that I was too old to learn. I thought I'd ossified. Turns out there didn't end up being anything to learn. And that's why I was so confused. It wasn't making sense for me because it was really just engineering a better Ponzi is what all that stuff was. But I remember he had just bought a condo with a leverage, a mortgage backed by his cryptocurrency, and he had a projector on the screen, and it was a he'd have trading view up there because it's very important to him, and he had a let's go back and let's do this. Let me while I narrate. And so he had, and this was probably about I think we were in the 40s. We were in the 40s because we'd already gone through and weathered the storm of July 2020, and this would have been in early 2022. Okay. So we came up here, and another thing I want you guys to notice, which Bitcoin did at 126. I talk about it all the time in these live streams. False breakouts. Same premise as that little spike down on MicroStrategy. Same premise exactly. When the price runs down, close back is inside the range. No better sign of reversal. Go back and look at the MicroStrategy thing. Look at Bitcoin on the weekly. Draw a line from the past all-time high to 126 where it failed it. That's why you got the pullback. And same thing happened back in October 2021. People stopped buying. It's just that simple. Like when you want a breakout, same thing happened in May and April of 2021. Just no better sign of reversal. Just that note. And so on his screen, he had some indicators up there. I don't remember that, but I remember very specifically he had a line at $16,000. Remember, we're in like the 30s. We're in like, you know, I think it was the 30s at the time. You know, things are still fine. Everything's fine. Everything's fine. Yeah, it can't. And I asked him, what is that 16,000 number? And he said, like, what is that? He said, oh, that's my liquidation for my mortgage. In other words, if Bitcoin got to that point, his Bitcoin that he had put up as collateral for his mortgage would be liquidated. They would take his Bitcoin. He still got to keep the condo. So everything kind of worked out. It's just that, you know, I think he put up as much as the condo was worth at that price, perhaps. I don't know. That whole system blew up, and a lot of, you know, these crypto-backed loan companies went bankrupt. So, but I remember seeing that number and thinking, I didn't say it to him because we were friends, but I remember seeing that $16,000 line when we were at 32 in the 30s. And you gotta understand, like that's so far away, right? In the 30s, still really far away. I mean, we were just at like 66, right? I mean, 16. No, can't go 16. That's a safe one. That's a safe number. It's a safe level. It's a good point to have your stop. Good point to have your liquidation. But in my mind, I haven't done this for many, many years on many, many assets. It told me where it was going, because every single market participant is the market, and that place where price just cannot go, will not go, cannot even imagine it going, it's going to go there. So again, I try to will see it. I try not to say things are absolute given, but this is just what the market does. It's what it's done for hundreds of years. Hundreds of years. Long as people have been trading stuff, seashells for oil and all that kind of stuff. What was that? Yeah. 16,000 was his liquidation point, and it got there. And here's the thing, it probably was not only his liquidation point, but it was probably the liquidation point for everyone that had these kind of mortgages, perhaps. I don't know. I don't know exactly what made that happen, what made the self-fulfilling prophecy happen, but I just remember that 16,000 line when price was still at 30K and everything was fine. Everything was fine. And then that's where they took you out. So it's just like it's not just when you're trading and you get a liquidation spike and it stops you out at the bottom. It's the thing. See, this is what you want to see at all-time high break, by the way. You want to see it at least close above it, even if it teases you a little bit. As long as you get that close, you're probably going to be okay in the bullish trend. But like I said, and I said it when it happened, there is no better predictor of a reversal than a failure for that bar to close above it. No better predictor. There's your first one. There's your second one. And not to kind of, do a little bit of past performance indicating future results, but there's your first one. There's your next one. I think they're cooked. But it might work out. It's just the question is who's going to buy it? Who's going to buy their bags at this point? What is the next bullish thing they're looking for? Who's going to buy Bitcoin to drive it up? It's not them. They already own it all, or they already own as much as they can. They're buying pullbacks and stuff like that, but we'll see. We'll see. Okay. Let's look at things that have done well this year. The meme that kind of aggravates me, that makes me not be bullish on Bitcoin, is just the narratives around it. And more than once, I've been asked this question. It's in the context. Let's talk about silver. So I was in a chat with Bitcoin Maxis, and they were talking to a guy that's one of my good friends that's been a big silver bull for a long, long time. I haven't talked to him in a long time personally, but I remember he would come to trading meetups and he was like big on silver. And this was like a decade ago. Silver, silver, silver. And kudos to them. They've held the line. And now they're doing good. All right. Somebody posted a meme the other day about let me find this thing. Let me just find this. It's just so low energy and dumb. Like this guy posted this. I'm gonna leave him off, but this guy comes in chats and he posts this low energy bull posting. Eric Trump says Bitcoin will replace the banking system, calling them antiquated, predicting gold and silver bugs wrecked. LOL emojis. I don't think the gold and silver bugs are feeling very wrecked right now. I don't think they feel that way at all. Okay. But yeah, what are you bragging about? Bullion, yeah, it's bullshit. So, yeah. But as this guy was talking about his silver position and how he still thinks there's a lot more upside. I made a post about silver, by the way, this week. Not calling a top, but I just want people to kind of pay attention to. I looked at history, like what silver was priced at, like relative to labor throughout history, trying to come up with some idea. But the real kind of takeaway is like we had another big yeet in 2011, up 493%, down 72%. And then in 1976, you had a 900% run, which then retraced by about 88%. Volatility is a double-edged sword. So my thing to silver bugs is be careful, because you're getting a big gift right now, but this silver doesn't really stabilize. It doesn't have a history of stabilizing at the top of the yeet. It has a tendency to stabilize once the yeet is over at a much lower price. So just be careful. Not calling a top, just be careful. But as he's taking a moment to talk about silver and how he thinks it's really good money and it's been a great investment, and he still thinks it is, still has a lot more upside. He was asked the question, well, would you put a super majority of your wealth into silver? Who asked that? Bitcoin maxis. At what point would any reasonable person in finance or otherwise or in life think that it was a good idea or even have the idea of a super majority of your wealth? In other words, most, not just 51%, not just 60, but like 80 to 90, a super majority, or 60%, I guess is a super majority. But like the only people that think that way are the Bitcoin maxis, that they have to have all their money in Bitcoin. Can't put it in anything else. And if you don't have all your money in it, clearly your conviction is not nearly strong enough. These funds, I think Stanley Druckenmiller, he was quoted as saying, is diversification is where conviction goes to die. In other words, he's suggesting that you need to deeply research something and then concentrate your wealth in it, and then you get those asymmetric gains. That's true, but his fund also has 80 different positions. So yes, he is. He he's not really following that logic, but he is because obviously he has specialists that follow each of these assets. But that doesn't mean that you put everything into it and you just hope things go well. And even then, like I said before, if you're paying attention to this year, you have the first year so far, we'll see how it closes, of underperformance after 3 years of performance. A lot of the narratives that were driving Bitcoin up have died. Are you paying attention? But anyway, I just thought that was like really, I wouldn't say weird, but it's like only a Bitcoin Maximus would espouse that you need to have all your money because they're not just drinking the Kool-Aid, they're swimming in it. They're thinking that, oh, fiat is evil and stocks and companies, they're all going to eventually convert to Bitcoin one day. Why? Because I made it up. And that you need, if you need to have so much conviction in an asset that you would put a super majority into it. It's just fiduciarily irresponsible, but that's what they believe. So it's a bold strategy, Cotton. We'll see how it pays off for them. All right. So silver, congratulations. Clearly brand new high. I was a little concerned because you 2 weeks ago had a false breakout, but you know what? After that, you had another what I call big green dildo bar to continue the trend. Good to go. Enjoy. Not gonna try. I will say this, I've tried to start studying using historic volatility to come up with targets for situations like this. Now, this is a work in progress. About a month and a half ago, I did a live stream about this, okay, where I made an indicator, vibe coded it, by the way, because that's what we do nowadays, where I look at basically what are the ranges 1 and 2 standard deviations of what. Okay, so you take the current realized or historic volatility. Let's just bring it up on here. While we're talking about silver, it's a good chance to look at this. So what we're going to do is we're going to change this to a length that's going to be bars. And so, of course, 52 bars, let's say a year. And so right now, the current realized volatility or historic on the last year is 31.87%, roughly. Yep, about that much. It's called 32. And so what you'll do then is I took that and I said, okay, I want to draw an envelope that shows me, because volatility suggests what the most probable move is, up or down. And that's where the 60 is a 68% chance of falling inside this range. Or actually, I tweaked it a little bit to be touching at least this range because I'm looking for profit targets. That's what it means, basically. You take the volatility, you draw one standard deviation up, which is 30, was it 32.8? Anyway, half of 68, right? Yes. 34, 30, yeah. And you basically draw like a V out from it. And So what that's going to do is that's going to tell us or suggest to us, like, let's just do one standard deviation. We don't need two. We could do two if you're being bold. But basically, at this point, what the volatility suggests is that within the next year, at some point, it has a 68% probability of touching either 79, this is silver futures, or going back down to 43. That is the most likely within 68%. If you want to fully encapsulate it, two standard deviations, what is that, 93% chance that's going to fall within this range? So if I was being super bullish, and I wanted to have some kind of guidance for what my profit target would be, I'd probably be looking at 107 over the next year. That's my bull case for you guys. And it's just based on and again, this can change. Volatility is spiky, but lacking anything other than just guessing, I wanted to try to maybe build myself a profit-taking indicator that keeps me humble and keeps me grounded. And so what I would do is if I was in this trade, I'm not in this trade. I'm not against it, but just silver's not something I got into, and I can't buy something when it's in a eve. I just don't do that. But if I were looking at this for profit targets, I would say one standard deviation, and I would start to probably look at the 68 or the 78, probably the 68, because that's where you can kind of see that that volatility is creating a little zone there for us. So yeah, upside still, just being conservative, That's all. So that's what I think about silver right now. Let's see. We're gonna look at your symbols here in a second. I promise we'll go as long as we need to. Make sure you get them in the chat. I got a list of them to go through. I will go through all of them. But I want to go through and look at some things this week that have happened. So Kroger, one of my favorite stocks, has been going through, as we talked about at the very beginning of the live stream, a major pullback. Oh, I will talk about Ethereum here in a second. I need to talk about that as well. Again, to the bottom of the cloud, but momentum is still strong. And so I think this could just be a nice pullback there. However, the trend has been weakened by this pullback. But Kroger is something that my good friend Jen has been making me aware of since all the way back in 2022, 2023. So we're up a lot, and I still go shopping there a lot. So I'm going to hang on to that. I like to own shares, by the way. I know some people still like to do options, but it's just so much better to not have a time constraint, because like the best, I'd have to look at, I think probably Palantir. I'm up like this year way more on Palantir, but I've owned it for a while. But as far as like new trades that I put on, probably the best performing stock this year has been Dollar General, a discount retailer. Imagine that. Didn't even pull back to the 50% on the pullback. It had earnings this week, and I don't know what they announced, but it's up a lot. And this, of course, was bought back in February, live streamed it, Discord, everything, based on the volume profile level from a decade ago. Very simple. I really kind of discovered this earlier on in the year because a lot of things did this. Hershey's, Mondelez, and Dollar General. Pull back to an old place in market history where there was a lot of buying, a lot of trading. You can proxy that for this is where most traders are, essentially, like what they where they're positioned. And 10 years later, I don't know. I'm not, whatever narrative you want to do, it works. It worked, and picked it up at that level, and I've just held on to the shares. And it's up what 70 something percent, 85% this year from the buy point, about 71. It's great. All right, so let's see what else to look at. Yeah, Palantir's still going pretty good. Wouldn't buy it now. I don't know, I posted in the Discord, but Michael Burry did a podcast, a little short podcast. He never does interviews. He never talks to anybody. But he felt the need to talk now. Now, everyone loves to give him crap because he's a famous celebrity, because Christian Bale played him in The Big Short. Book was written about him. He was the guy that, was the one that created the credit default swaps that were the linchpin of the whole Big Short in 2008. Made a bunch of money betting on something that no one thought could happen. So I got to have a lot of respect for him. And the TLDR from that very short podcast, I recommend you look it up. It came out this week. One of the things he said was, if you're going to buy anything, you probably want to buy healthcare because it's the most beaten down. He also has some choice words for Bitcoin being worthless. That's pretty spicy. Well, the reason it was all brought about is because while everyone else is bullish on AI, he put on a pretty large put position 2 years out on Palantir. So that's what made him kind of come to the forefront and everybody talk about him so much. Because, oh, he's shorting Palantir. Michael Burry. He's just a trader. He's been wrong a lot, just like me. I'm wrong often, but I'm right often enough to have enough to keep doing it. So, all right. People have been asking me, by the way, like, hey, can I buy this? Can I buy that? Let me just tell you guys something. Right now, the only thing I'd be possibly wanting to buy would be an Eli Lilly in August scenario. I say that, it's already passed, but in August, Eli Lilly, a company that I've owned for a very long time, which has hitherto just continued to print money, did a very clear 50% pullback to 640. This is, again, I call these have to take trades. Like, don't worry about losing money. Well, yeah, worry about it, but don't psych yourself out and like, I don't know, no, this fits your rules on a good stock or a good instrument, whatever. 50% pullback, clear as a freaking day. Only things that are, for lack of a word, perfect are what I'm interested in now. Because circle back, market's at the top. And remember how we talked about spikes, the spike indicator? I forgot to mention, or I think I did mention at the very beginning, but right at that volume profile level today, or it was set up right there, that node, that's where we spiked today. So be very, very careful now on the market. Still a bull market. And it just likes to keep going up. But little sign today. The other thing to look at is we looked at Dollar General. OSCR, that was something, this is the most recent thing we put on. 14, volume profile. Messy chart, but it's healthcare. And my friends liked it. So just like Palantir, I got in because they said it was good. I was like, all right, looks like good. Trust you. Of course, despite the fact that Monero has done that thing I talk about where it kind of does a false breakout. It did it a few weeks ago. Now, of course, last week, this is a weekly, in November, it closed above it. Now it's back inside of it. Despite the fact that, it's been very resilient, and I think it's probably not only the best, but maybe the only asymmetric bet in crypto right now. Don't buy Monero. The government tells you it's bad. You don't need privacy. Only criminals need privacy. Only criminals need a privacy-focused coin. It's been delisted. It's been banned. There's not going to be any corporate Ponzi's like MicroStrategy buying it because they can't validate how much Monero is in any particular address. They can't validate transactions. No one can see what you do with Monero. That's why it has completely taken over the use cases that Bitcoin had 10 years ago. It's even taken over ransomware attacks now. But don't buy it because people tell you it's bad. Don't buy Monero. Ethereum. Oh, it's cooked. It's cooked. And I talked about this earlier this week, and now I'm revisiting it. Like I said, the reason I didn't take this short is because I think Bitcoin being the big bully, I'm looking, like I said earlier, for Bitcoin to pull back to that 103 resistance level, the 50% of this leg down. There's just a lot of confluence from this downtrend around that level. I'll probably cite there. So if Bitcoin had pulled back at the same time to like this level this week as Ethereum was, but it's such a clear valley of risk scenario. What is the valley of risk? Well, as I looked at, Eli Lilly earlier, and I looked at the 50% retracement that it came down to. When you have a major trend, what you want to happen is you want price to come down and respect that 50% level, and that is a good trade, like in this case, to go long off that 50%. Just like we looked at Eli Lilly on the weekly. Let's just see what happened there. So yeah, that 50%, that's what you want to see comes down. It's very simple. I know you want moving. I know some people want moving averages. Some people want RSI. Some people want all kinds of stuff. But 50% retracement, all you ever need. And came down to there back in early November, Ethereum. But when you break that 50%, you enter into what I call the valley of risk. That is where everything that you do is wrong. How many of you guys have been in this situation before? Where if you bought something, or you've been hodling it, and now it's gone below the level that you entered. You haven't stopped out because you don't want to take the loss. Okay. So what happens when you get into this situation, I call it the value of risk, because you don't know the down, you don't know how far it goes down. You don't know how far it goes up. Anything you do is wrong. If you sell it, it's going to pop up. If you hold it, it's just going to keep on grinding down. You have to stay out of the valley of risk. You cannot let once it breaks that 50%, you need to tell yourself it's done, move on, look for another opportunity. Maybe it'll come back. But this week, when I was asked about it, that 50%, not only is it a great level to long if it holds it, but if it breaks it, it then turns into a potential resistance, which it hit and held. Now, anything can happen, but this is the most dangerous thing that I see whenever a price does something like this. Again, I'm always a will see Chad. Anything can happen, but the case in point that I bring up, I always bring this up because I was in this trade, is Zillow, where I bought Zillow back in 2021. Tech's still good, real estate, woo. And it came back down to there, entered on the 50%, gave you a little bit of like, oh, okay, this is going to work out. This is going to work out. But as soon as it broke below this low, I was like, okay, this isn't holding, not holding out. I don't care that much about this. I don't have all my net worth tied up to it. It's just a trade. I'm unemotional. Let's stop out. And gives you again that retest of the level, because now you're on the underside. And then they announce some kind of big, write down or potential bankruptcy. And there was something like a 30% gap down in a day. You couldn't have gotten out. You went from there to there. And this is what I mean by the valley of risk. You hold on to it. You think it's gone. You think it's done. You think it's done. It's just going to keep on hurting you. You have to avoid the valley of risk. And so whenever I see a major trend like this on the daily from April to here, and you held it, proving it's there, spent time underneath it, come back up to test it from the upside, danger. Will Robinson, danger. Oh, and by the way, remember what I said about one of the key signs of reversal is a false breakout? In other words, you have something that intrabar comes up, makes a high, and then closes back inside it. Yeah, should have known. So, to my friends that have a lot of stake in these cryptocurrencies that are hoping things will be fine, I'm neutral. I'm not in these things. I hope they're fine. I hope you make a lot of money. I'm very concerned. So, yep. All right. Another thing I closed out. I'm gonna get to you guys' promise. But I want to talk about 2 weeks, 3 weeks worth of stuff to talk about. I closed this is a little obscure trade. This is the USD CNH, which is the USD Chinese yuan. Chinese yuan, Y-U-A-N. It's Chinese currency, basically. And I put this on back in April. Again, same setup across every instrument. I do the same thing again and again. What did I say? False breakout. I haven't traded Forex since like 2010. Okay. Been too busy with stocks and crypto. Crypto basically came and took Forex's, market share from people that wanted to trade 24 hours a day. Just because you can doesn't mean you should. But I saw this happen in April. At the same time, I saw this happen on the dollar USD CAD. Again, false breakout, spike triggered by the indicator. Okay. Spike. That was another one where basically you had a high here in January of 2020. This weekly bar, because Forex, you can trade it, day trade it, but it's much better traded long term, like weekly, daily at the lowest. False breakout. I literally opened an account just to trade this because I saw, wow, a weekly false breakout on a major currency pair, the dollar CAD, dollar Canadian cross pair. And then while I was doing that, I noticed that the dollar Chinese yuan did the same thing in April, and I went long that. Or excuse me, I shorted that. So I've already closed out the CAD a few months ago when it kind of stopped. But then I went and looked. I was talking to another friend that was also in this trade. They were in the trade for a fundamental reason. They live in China. Okay, so they were in this, and they had a little bit more complicated structure. I'm not sure what it was, but we both agreed for different reasons to short this. Mine was technical. His was fundamental. Like what is it? The Predator meme. Yeah, we did that in agreement. But he knew, and I knew this too. Like, in order to facilitate a Forex trade, you have to basically borrow one currency and sell the other. And so in this case, you have to purchase Chinese yuan through the broker. Well, it's a loan, and a loan has an interest rate, and the interest rate is so high that by the time it got down to here, even though I'm up a lot, 80% of my profit had been eaten up day by day by the interest rate. So I closed it. Not worth it, but it worked out. Just didn't get paid to be right. All right, now let's go through the list. Get your things in. Hey, what's up, man? The market is over. Start buying puts. Maybe. I need a little more to start buying puts on the stock market. What's VIX doing? VIX is pretty low. VIX is still in the teens. That's a good time to buy. Well, the thing is like I've just known so many people over the years that every time the market goes up, they buy a put. Why? Because they think the market is going to crash, and then it doesn't. When it starts to crash, I'll like in April, made a lot on futures, and the best futures trade I took was, of course, on when we were around this area right here, and I caught a big chunk of the down move in April. Okay, same thing. I was able to pull off IIRC back in, when was it, 2000, and yeah, same thing. I was able to pull off trading puts on individual stocks back in 2018, where first of all, we had a crazy first quarter from January to here. This was when the Fed started talking about tapering, spooked the market. And then by around October, you actually had a big down move, volatility increased, and you had these up moves right here. And so I was able to capture a bunch of puts. I can't remember exactly what it was. I don't remember what the symbols do oftentimes. It just fit a technical setup, and the IV was correct. And so this actually hurt me. I was actually in the red all year as a trader on my trading account until this right here. So it's never over, guys. It's never over. It's never over. You still got, if you think your account's in the red now and you're just in December, you still got time. But anyway, point being, you don't need to buy puts here and lose, buy puts here and lose, buy puts here and lose, buy puts here and maybe win, maybe so. You can get a real bear market there'll be that hopium that comes in. They'll be like, oh, okay, okay, things are fine. We're going back to the high. That's when you short them. So that's how you handle a bear market. You wait until everybody's comfortable. You wait until you have a big drop. You wait until you have a big drop. And then you go on social media and you start reading all the people talk about, oh, okay. Oh, everything's gonna be fine. It's fine. Everything's recovered. We're fine. We're still gonna be as rich as we wanted to. We'll go back to planning our retirement. Everything's fine. You wait until you start seeing people do that. And then you're like, nope. I don't think you're gonna be fine. All right, let's look at your symbols. Let's look at them. Let's knock them out. Let's knock them out. Let's see. Let me look at Swaggy T's real quick. He asked me even before the live stream started. All right, so Target. Wait, Shark Ninja, Target, Shark Ninja, United Healthcare, RC. Okay, Target, TGT. I think my fiance was in Target. Yeah, we got out. We got out when it did the pullback up here in the summertime. Last time we looked at it was in the summer because Target was not doing what it should be doing. And yeah. And so we got her out of that, thankfully. And now it's down to 92. When asked about Target, what I've been looking for is a major pullback to volume profile, like I did with Dollar General. Not just because they're retailers, but because you got a big volume profile level at 76 and then the biggest down at 71. And so I'm not interested in Target until 76 or 7. Basically those volume profiles. I want it to die a little more. All right. Shark Ninja. Shark Ninja. Oh, it literally is Shark Ninja. Nah, it's probably some tech thing, maybe some AI. Interestingly enough, if we go back and use this as a messy, I wouldn't have liked that, but there's a 50% pullback. Ooh, that's not good. Now it is recovering a little bit, but of course, what have I told you guys about false breakouts? That August spike, but it's recovering, but still, that's a short right there. Neutral. It's not a level I'd take it. All right, UNH. I am of course bullish on United Healthcare. Have been. We got in along the time of Michael Burry and Warren Buffett. Again, 244 was a major volume profile level from the mid to late teens years wise, from 2017 to 2020 pre-COVID. And that's where it pulled back to. Now, to be honest, I first bought in at the 50% at 330. And then when it finally hit the 244, that was the last like Hail Mary, and we're good. And now I've come back up to hold the thing. And if you look at it in the long term, it's messy, but the volume profile was much better. But yeah, definitely bullish on UNH. NCLH, that's Norwegian Cruise Lines. I've kind of been not too. I don't like NCLH. I've obviously talked about it before because I've actually done the pandemic drop, and then like here's the sea level that it needs to get above. Remember we talked about the 50% where it needs to get up there, break it, pull back, and then go. Yeah, that's what I'll be looking at there. All right, let's go through these. All right, so let's see. No second best. I know you've been waiting. I know you couldn't make it, but let's do yours. Duke Energy. Looks like it prints money. Let's go to week. That's a monthly. Sorry. If I recall correctly, yeah, like Obviously, this is long past, but there's your 50% hold back in 2023. That would have been the level to buy it. I don't really see an opportunity right now, but I like it. I'm sure it's still a good dividend play. And if we go into a bear market, it's going to be a defensive play. So it's going to outperform a lot of other things. If looks good. That's a hold. Not an entry, but a hold. So all right, let's see here. VST, Vistra. I don't see anything particularly. It looks like it's doing okay. Bull trend. And again, teachable example. Messy 50% hold, but still pretty good. It can mess around, but it helped the trend. Uh, that's where you want to use Ichimoku to kind of back you up sometimes in trends, like we talked about at the beginning of the live stream. You got down into the cloud, but your momentum was still strong. If you're a long-term holder or you're looking at that pattern, it's fine. If we go to the monthly and we see, it gets a little concerning. It gets a little concerning because, uh, okay, rules. You do have a bar that did close above the past all-time high. So that was not a false breakout initially. And you've had these bars right here, which have kind of poked and not gone. Wouldn't say that was a full-on rule fitting reversal. So if you're holding it, I think you got a reason to, but it's a little shaky there at the top. Not an entry for sure. So TLT bonds. I haven't looked at that in a while. Doing nothing, which is what bonds do. However, it could rise from this point. What would make the price of TLT go up is if interest rates went down, which is what people presume they'll do. Why? Because Trump wants them to. I don't know. I don't think interest rates need to come down anymore. I think we've got a good level of inflation and markets are at an all-time high. So we probably want to keep that. But that's just my opinion. The Fed doesn't listen to me. This would be something that you could buy, and I wouldn't be mad at you because you don't really have a basis for it. You only have a technical basis. But like I said, this is something, buy low, sell high. I wouldn't be mad at you. Not for me right now, though. Like I said, I am in the big wait and see mode right now. I want to see what happens. I also am trying to buy a house. So I kind of need to keep money to redo the kitchen. All right, let's see. What else? AMRC. Amerisco. This would have been a good thing to pick up when everyone thought it was quote unquote dying. Didn't quite get to that volume profile level down there. Not really useful to use the whole thing. Let's do the pre. Let's do the pre-eat right here. Do the eat. Didn't really help us much. What I would do in this one, again, what you would have wanted to do was you would have wanted to see this weekly bar right here. Again, look at that. Those bars, guys, those bars right there. Whenever you have something that comes down like in the same bar, whether it's daily or weekly, and then by the end of that bar, by the end of that day, by the end of that week, it closes back inside the range, no better sign of reversal. Like everything else, doesn't always work unless it's Bitcoin at the top. But what I would do here is I would look at 2671 and I would keep an eye on that level. That's the 50% retracement of this current move up. And we're gonna match up with the volume profile. I would have my stop below. My risk would be below that volume profile in case it wants to poke its head below it, hit that and hold it, and then go back up. And so that's how I would look at that. I kind of like that one. I kind of like this. I kind of like this. I'll keep an eye on this one, actually. So out of those, AMRC. I like stuff that's dead. Okay. I'm a contrarian. That's why I appreciated Michael Burry. I want to do things where people think, oh, this thing is dead. And this is something where people have probably written it off. Don't even know what it does. I just want to look at the price. And yeah. Yeah, we'll see about that one. All right, let's see. Let's go through, finish up Discord. By the way, guys, make sure you hop in and talk to us. You took profit on NVIDIA short, rolled them out. I'm not going to be mad at you for shorting NVIDIA. I mean, if you're going to short something, short what everyone is sure is the best thing ever and going to continue to be the best thing ever. I don't see a setup. In other words, I don't see a major pullback here. And you just got straight up bars. So I don't see a false breakout. Short's not for me, but yeah. Looking to pull back to 150. Well, here's the thing. Like, let's forget that all this happened. Okay. Let's go back to ancient history. Okay. Ancient history being 2021. And let's just note that this great thing, which it had a big run up because of crypto mining and stuff like that, they got really lucky. It had a 68% pullback. You'll find that a lot of tech stocks have more than 50% pullbacks. And so whenever people have been trying to tell me they want to buy or should they buy Nvidia, I've told them the same thing. Like, if you wait long enough on these tech stocks, and you may have to wait a few years, you're going to get them on sale of 60 to 70, maybe sometimes 80%. I mean, let's not forget, look at any tech stock. Okay. The volatility is there. Like, was it Facebook Meta had a 70% pullback, and then they went up. Yeah, if you would have bought the high here, sure, you'd be okay now, but you would have endured a year of really being mad at yourself. And a lot of people can't take that. I can't take that. So all tech stuff, if you're not in it, you missed it. Just eat it. Take the FOMO. Take it. Take the pain. But don't act on it. Tesla, I've been asked about that this week. I'm in it. Been in it for a while. I have a Tesla. It's great. The only flaw with the Tesla full self-driving that I've noticed is that there's no button I can press that like brings a curtain across my windshield so that I can take a nap. That's like a big design flaw they have with FSD, that I can't block out all the light so I can make a nice little sleeping cocoon for when I'm driving, or when it's driving rather. I mean, I didn't buy my Tesla for me to drive, but yeah, the fact that you can't like block out the sun and take a nap while it's getting you from point A to point B, big design flaw. Going to definitely contact Elon to get that fixed, hopefully in the next couple of months, where we can make that happen. But yeah, I like Tesla. I like Tesla a lot, but it's not really the place to buy it. Sorry. Well, you can. It's just, I when I see something up like this, I'm like, I can take a longer horizon. Let's let it eat and then pull back, and we'll buy it at a discount. Because chances are, when everyone's bullish on something and they're telling you that you got to buy it, give yourself 6 to 18 months, it'll be back at that price again. And then you can buy it and not go through all that pain. That comment is not about Tesla. All right, let's see. Let's look at, what is S? Sentinel One. I'm going through YouTube now. Let's see. I see what you're putting down. Good luck. Yeah, I mean, if I'm taking, all seriousness, you want to see some kind of move up like we did on the AMRC, and then you want to try to grab it on that 50%. Let the market show you first. Let other people take that risk. Come in late, but with more probability of success. So I would wait and get you some kind of bullishness on that. Or you could buy it now and you can get lucky. So GLXY, Galaxy Digital. So depends on if you want to measure it from here at the very bottom, which I probably would, because that's the full trend. It's very messy, but this is a good one. I like it. I mean, I don't like. Yeah, you know what? Let's just be independent. Let's just be objective. 50%. You had to pull back. This is what I'm talking about. This is what I'm talking about. Where whenever something gets into a yeet. By the way, what did I say about false breakouts? By the way, these are things that people submitted. I didn't plan these. Like, you go through a bunch of charts and look where you see where price shoots up intra-bar, closes back inside the range, and how often that thing reverses. Just do it. Don't look at any other indicators. Just study this. Just study that. But yeah, that's pretty good. That's 50%. Yeah, I might look for other things, but that's objectively a 50% level. I'll note it. I'll keep an eye on it. Unreal Tournament guy. He asked me MSTR, when will it go to 350? I have a question. Is that your purchase price? Are you asking me when am I going to get back to break even? I wish you all the best. I mean, I think you, like I said at the beginning, or I posted on Twitter, like if one were going to take a long, one could take it here, but you got a lot of ground to cover. And I think that the music stopped. And I think that Bitcoin is entering into a bear market, and this is a leveraged corporate Ponzi. And there is a, let me just show you. There is a Twitter group called, unironically, Irresponsibly Long MSTR. They literally know that what they're doing, or excuse me, what they have been doing for the last year was irresponsible. But yeah, it's basically just a bull posting thing. 2 trillion Japanese investment bank Mizuho just says strategy MSTR. He just, well, there you go. An investment bank just said it's going to 484. Buckle up. Like seatbelt. Dude, that's every day is like, buckle up, or somebody said this. Are you ready? You are not prepared for what comes next. God candle loading. Every fucking, yeah, I can say it, whatever. Every day, every week for the last year, God candle loading. You were not prepared. Yeah, okay. How's that worked out for you? Look, when people are saying stuff like that, you're not going to make money. You just aren't. I'm serious. When you go on social media and you read what people are talking about, and they're saying this thing is going to whatever, this thing, it's happening now, like buckle up, rocket emoji, you are not going to make money on that. Can't say it any more clearly. Just you're not. You don't. You don't. You got to buy stuff when people think it sucks. You can't buy it when everyone thinks it's great, because that's the price. It's priced as if it's good. Right now, what is it? It's priced as if it sucks. I got to admit, the FUD is pretty strong, but I don't know, actually. Shoot. Like, did I just read? Like, hold on, actually. Hold on. Did I close it? Let me reopen that. I think I closed it in disgust, but let me reopen that. Hold on. Irresponsibly long MSTR. Let's see what they're saying. Hang on. There we go. What are they saying? Let's see. All right, let me see. I need to look at some stuff. I meant to get off of MicroStrategy a second, but let me check things. So let me make sure I got everything. My price goal is 62, but 43K would be nice. Yeah, 60 to 40K on Bitcoin. I think that is really the zone of the bear market that we may have entered into. I really think it is. Do we got? I'm going back through chat here. Let me catch up with chat after my just. I want. This is us doing research here. So Fudbuster in chief, Fong Lee spoke to Bloomberg about. Yeah, this is December 2nd. This was earlier this week, where he talked about how they made this reserve. So he's the Fudbuster. Yeah, he's going to make it go up again. They bought National Bank of Canada just revealed that they bought 273. It's just a bull posting group. This is what you come on to when your position is down and you want to be told it's all going to be okay, rather than responding to the market. I don't got time for that. It's worthless. It's literally opposite of good. All right. So Zcash. Zcash, I made a conscious effort because it was a privacy coin. First of all, what did we learn today, class? 50%, break it, come back up, hold it. Most dangerous thing. Cooked. So I think I chose to be completely neutral about Zcash, just like I am anything as a yeet. I don't buy it. I just watch it. I know deep down what it is, but this was the most obvious pump and dump in recent history. You had the Winklevoss twins, who have a bankrupt company they're trying to keep afloat, come out and start shilling it. You had all these people shilling it. Like, look, you don't if something is good, you don't have shills. If something is good, despite all things that may be against it, like delistings and bannings and people fudding it and everything like that, when something is just being adopted, when something is actually being used, actually has value, actually has a reason to exist, like Monero, don't buy it, by the way, it just goes up and no one promotes it. They don't need it. It does it even in spite of people talking against it, like me saying, don't buy Monero. And so when Zcash started pumping, I chose not to care because it was patently obvious what it was. So pump and dump. I go on social media and people are telling me, oh, it's bullish. You gotta buy it. It's gonna replace Bitcoin. I've just been doing this too. I've been doing this way too long. Like, to not just have fun. Have fun. I hope that people learn. I mean, I've done stupid things before, but I did them like a decade ago, you know? Like, actually, I never really got into I never really FOMO. I don't think I'm very fortunate. I'm very lucky that FOMO is just not something that I feel. I don't. I mean, I do kind of sometimes. I mean, I feel it like, I missed it, but I don't go rushing after it. That may have been a problem when I was much younger. Definitely not a problem now. I'll have fun being poor. In every circumstance someone says that to me, I will have a great time being poor. Okay. Yeah, dude. Well, yeah, that's just what he said. Bearish daily candle. Yeah, pull back to 50%. All right. Sound. All right. Sound. I don't know who Teddy Swims is, but that sounds like an AI musician. But I'm gonna choose to believe it's because you like the tone of my pleasing baritone. But no. I can only sing in the shower or the car. Don't even do karaoke. SoundHound AI. I'll tell you something. I'm not, like I said, I'm not a musician. I'm not an artist. I'm a chartist, but I love me some AI generated music. Can I hold on? I I I don't think this is going to be DMCA, but like for instance, hang on, because it's AI generated and it's only now it's up to 300K views. Let's see if this comes through the sound for you guys. So this is I mean, as the Zoomers say, this slaps. Hold on, come up. Is it coming through? Oh yeah, 100%. So there are all these remakes that are coming about right now from AI, and I don't know if that's what this company does, but I'm gonna share this with you anyway. And I love them, and I send them to friends that are big. Oh, it's not music. What is it? What is it? I'm speaking past you, but like I send this to like musician friends, and they're like, "Oh, I can tell," or "It's not good. It's not unique. It's not Cope harder." Like, I'm sorry. Like, I'm really sorry, but like, technology's gonna take things over. Oh, it's good. All AI. Now they have to go through a process, I think. But I thought this song was great, actually. AI voice recognition. Okay. All right. So, anyway, I thought that was really cool. What's your group? Oh, is that your group? Unreal guy? Sorry, I just see you in your name. Um, yeah, well, if you want to go there and you want to get bull posting on MicroStrategy and make yourself feel better, that's fine. Uh, all right. So AI voice recognition. Well, I'm cautious anything AI now. Like there is a concept called, and this is really applicable to finance. I think it's Amara's. I think it's called Amara's law. Okay. Yeah. It's we tend to overestimate the effect of a technology in the short run and underestimate the effect in the long run. Key point, internet. In the short run, you had the dot-com boom, where anybody doing anything internet got millions. This is before they get billions, but millions of dollars in investment, which they then proceeded to buy lavish luxury office chairs and all kinds of things, and didn't make any money, but it didn't matter because it was internet. Because they overestimated in the short term that pets.com or everything like that, or or any other company, like a lot of companies back in the dot-com era did something like this. Like I said, pets.com or MSTR. They all did things, back in 2000. Yeah. Yeah. So yeah. So back in 2000, everyone just threw money at this thing. And there were certain people that ran companies that took advantage of this to pump their companies up to wild valuations and then proceed to destroy tons and tons of capital. That was 25 years ago, you know? So, yeah, but people overestimated technology in the short run and they underestimated in the long run. In other words, the internet hey, we're talking on it right now. Like I remember watching like Star Trek, you had the view screen, you'd be able to see people in the future, but here we are basically. So, but it kind of goes a very circuitous route, and you don't know which company is actually going to do it. But when you see a stock or something like this that goes up like this, and then they get charged by the SEC with accounting fraud, then you know that there wasn't anything there, and hopefully you don't trust that person with your money again in the future. But yeah, we underestimate the long-term effects of it. And sometimes, people forget, that lesson about Amara's law, where we tend to, overestimate it in the short term and underestimate it in the long term. And so yeah, um, that's with AI. This is not about this. This is about AI. AI is, we all kind of know and agree that it's going to like change our lives, but we're not really sure how. And so the companies that are going to do it, they're going to be around for a long time. And the really quintessential example of this is Amazon that I go up to, because Amazon was part of this whole, um, it was part of the .com. They sold books. Like, who the hell's going to buy books on the internet? We got Barnes and Noble. By the way, false breakout. But, you could have held it from the high all the way down to here for 95%. Okay. A 95% pullback on Amazon back in the .com boom. But it was still internet. Okay. And if you held on to it, you would have been pretty good. Or if you bought the high eventually, a decade later, you would have been back at break even. And then now you'd be like really, really happy. But the point here is this: the good companies that actually do something, they're going to stick around, and there's going to be signs that they're going to be good investments. You don't have to get in at the bottom. Been my lesson for the last several years when I do these live streams. When I talk about, back in 2021, when everybody was trying to get in on the blockchain stuff, or even in pot stocks. I'm gonna have to talk, I'm almost 2 hours in. We got to talk about pot stocks, and we got to talk about the weed industry next week. Actually, hold on. Thanks for hanging out with me, guys. By the way, for this long. But normally I only go for an hour. But like I said, I got 3 weeks to build into here. But yeah, you don't have to get in at the bottom like a lot of people think. You don't have to FOMO. Like, you could have gotten in at Amazon back in 2020, 2001, 2006. Probably a good time to get into it would have been 2008, because by that time they were doing, they're pretty obviously like at the bottom of 2008, you could have, or in 2010, or in 2012, or in 2013, blah, 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 blah. Or my favorite time to get into Amazon bigly was what I called the trade of the century, which was for no reason. I mean, as I've said, my fiance, like every day is a new Amazon package. She's going to keep them in business. That's for damn sure. In 2023, Amazon, for no good reason, pulled back to the 50% level for its entire history, going all the way back to 2001. 20 plus year, 50% level, 94.47. I put on the blue light, not the red light, stop. I was like, this is the trade of the century. Literally 25 years, 23 years, 22. And from that point, 2 decades after the company came out, you now have doubled your money in, a year or two. Now, yeah, you could have tripled it, you could have quadrupled, you could have 10x, but there's always going to be opportunity in good companies eventually. Just, you don't have to like rush into it. You can, but you're going to take some pain. So, all right, let's see. Coparts. So Copart, I was in it, stopped out. Yes, in the value of risk, TZ. Yep. So this was a trade, and this was a loss. It's fine. It's fine. I don't mess around with it. I pretty sure I got out. Again, it did. I think I actually got, when I saw it do this and pull back. I think I didn't. This was what I drew for the live stream, but the actual exit, once I saw it come down here, come back, and again, like I said, it's dangerous. Like, whenever you break, like, clears up. The level 44.97, very accurate of you. It also matched the volume profile level. This is a great level, by the way. This was a great level, but nothing's ever 100%. That's why you got to take the losses. You can't like think, oh, it's a really good level. No, you gotta follow your rules. When this thing came down and then popped back up and held 44.97, I think on this down bar right here, when it made a new low, I got out. So I got out a little quicker. And now you had earnings. That's going to definitely the value of risk. Very observant of you. Where would I get back in? In that case, what I would do is I would probably look at this price era right here. And the first volume profile level would be that node right there. And so 34. But the thing about the value of risk is you don't know. Okay. And what you probably do is you could go all the way back to going monthly now. Let's just clean it up. And the major swing low, which kind of defines a lot of things, is going to be, see, I say that, but then I do that. See, that's the thing about the value of risk. You never know. It's actually a good level now. It's actually a good level now. That's a good 50% there. You also have the benefit of it being a past all-time high, which, by the way, let's zoom in. What has been, well, it's not just the lesson of the day, but it's the most, God, it's just false breakouts. Right there. Right there. Just so good. So good. If you only look at one thing, it's false breakouts. All right. Second year residential cycle is like the sun or ocean tides. It never changes. What's up, Raul Tesla? I haven't seen you in a while, man. Good to see you. I love your quips. All right, guys. I got some things. I got some other business to handle. Happy Friday. Have a good weekend. We'll definitely be back next week to talk about some stuff. Thanks for hanging out. Been a really good stream. I hope you took something away. If you liked it, make sure you click the like and come hang out on Discord and talk to us. We'll see you later. Trade wisely.